Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Friday to you guys. So excited to welcome you to the last edition of the Extreme Speed Live Technical Analysis session. And as usual, I would love to allow us to take some time off to do a quick confirmation that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So by typing hi, I get a feedback that we are all good to go and we can kickstart the session. Thank you very much as you do so. So I can see Carrie in the house. Good morning to you, Carrie. Thank you very much for that feedback. Should we take that as a confirmation that we are good to go this morning? Okay, thank you very much. Thank you. All right, it's on this note. I'm wondering why same to you as well. No one else is talking about it. um, Same here too. Let's see, who else do we have here? Is it that okay, I can see Foresight. Thank you very much, Foresight. Who else do we have here again? Okay. Okay. I can see a handful trying to log in, but no response. If you can see my screen, please let me know in the comment section. But I'll take Carrie's and Foresight's feedback as a positive one. So it's on this note, I welcome us all to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be evaluating the financial market from both technical and fundamental perspective using our tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And today happens to be the last trading day of the week, and of course it also comes with its own peculiarity. As we approach the end of another trading week, it's important to recognize the significance of today, Friday, as a pivotal moment in the market. And this day holds particular weight as market participants begin to wind down their trading activities in anticipation of the weekend. And days like this, we usually see market participants often square off their positions, which can lead to increased volatility as liquidity starts to dwindle towards the end of the trading day. Additionally, there is a tendency for traders to take a more cautious approach, especially if they don't want to hold positions over the weekend when unexpected events can occur. So understanding these dynamics of last trading days in the market is crucial for us, and of course we are going to be taking it into consideration while we review the current market structure. So we will be paying attention to key technical levels and pattern, considering the potential impact of today. So I encourage us all to stay tuned in so we don't miss out on the valuable ideas we will be talking about. And I've been able to identify simple trading setups that we will be using to guide our decisions today. So buckle up, stay tuned in, grab your favorite beverages, and let's dive right into the business. And for those of you who are joining us for the first time, you're highly welcome on board. Very excited to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we are doing here? Well, as technical traders, we usually gather here every day as a community coming together to do follow-ups and reviews of our current trading positions in preparation of the New York session. So the session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So as always, we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the economic events that are likely going to be influencing the market sentiments today. And of course, these fundamental factors often manifest on the chart in technical patterns and price movement, and by monitoring the economic calendar, we tend to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves for the next move. So far this week, we have been monitoring economic features from both the United States and the United Kingdom, and so far we've had a bunch of impactful events throughout the course of the week, which has in one way or the other affected the traction in price action. So this week we were able to see the performance of the labor sector in the United Kingdom through features such as the ILO unemployment rate, the claimant count rate, employment change, claimant count change, and finally the average earnings including and excluding bonus. And from what we come up with, it shows that the labor sector in the United Kingdom is contracting, as the figures we had were not that encouraging, further adding to the woes of the pound sterling. Then later on Tuesday, we also had one of the major highlights for the week, which was the consumer price index, which is considered to be an inflationary gauge data, which of course came in beyond expectation to emphasize how sticky inflation is in the United States. And this of course resulted in some positive traction in favor of the US dollar. Then we saw a couple of other events from the United Kingdom, from the manufacturing sector, the industrial sector as well. And then we also had the gross domestic product, which recorded a 0.2% expansion. And remember, the United Kingdom churned out contraction in their GDP for the last 2 consecutive quarters, which technically puts the economy in recession. However, the 0.2% we saw on Wednesday was a good signal that the economy may be recovering at this point, but it wasn't good enough to bring in some positive traction for the pound sterling this week. We are going to be looking at that asset today and see how the market had reacted to the events and how we will be managing the positions while we also look out for new opportunities today. Then yesterday we saw another highlighting event in the form of the producer price index, which is also an inflationary gauge, and we saw how the data came in beyond expectations, further emphasizing how sticky the US economy, the inflation of the US economy is, and this also resulted in some positive traction in favor of the US dollar. Then we also saw the retail sales data, which came in below expectation, but it's still on the positive side as the data came in beyond the previous month. And then today, Friday, March 15th, we are looking forward to one high impactful event in the form of the publication from the University of Michigan, that is the Consumer Sentiment Index. And for those of us who do not know, this event gauges the prevailing sentiment and confidence levels among consumers, providing valuable insight into potential shifts in economic conditions. Now, changes in the consumer sentiment can influence spending patterns, impacting various sectors and market conditions as well. And this event here is coming up in about 4 hours from now, so we want to be looking forward to it. And if we look at the previous data for the month of February, it came in at 76.9, and economists are projecting 76.9. So we are expecting no difference from the previous month, but we still wait to see what the actual data is going to be like. Then besides this one, I had to include some mid-tier economic features which we also want to be taking into consideration, and one is coming in from the United Kingdom, which is the consumer inflation expectation. So this is like a projection by is a percentage that consumers expect the price of goods and services to change during the next 12 months. So it's like a projection of inflation in the United Kingdom. So we look forward to see what the data will be. We were looking at 3.3% for the previous month. So let's see what the actual data will be for this one. Then another event I would like us to look forward to is the New York Empire State Manufacturing Index, which will be released in about 2 hours from now. And this is giving us an insight into the manufacturing sector in the United States. And this data is usually released by the Federal Reserve Bank of New York, and it gauges the business conditions for New York manufacturers. And generally speaking, if the data comes in beyond expectations, we should be seeing this as a positive signal in favor of the US economy, which will dovetail in positive traction for the US dollar. Now, if we look at the previous data for the month of February, it came in at a deficit of 2.4, recording a contraction. And what we have on ground right now, consensus is projecting a deficit of 7, which is much more lower than the previous month data. So it's not looking good, but anyways, we will be looking forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? But one thing we do know for sure is that the anticipation of these events has a way of influencing the behavioral patterns of market participants in the assets we are looking at. So what we are going to be doing today, as usual, is to sniff through the current market dynamics on the chart, looking out for patterns and structures that we can use to strategically position ourselves for the next move. So with that being said, here we shall be diving right into the business for today. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And what a wonderful week we had here on this asset, as I will consider the USOILSPOT one of the most profitable assets on our watch list for this week. And if you look at what we have here, as at this morning we were running with over 7 positions in buy position. I'm running in total of over 1,000 pips in profit on this particular asset. And for those of us who were part of this profitable journey, I want to congratulate everyone, and kudos to you for being faithful with our analytical approach. For educational purposes and the sake of those of us who missed out on our earlier sessions, let's run through what really happened at the beginning of the week that led to the decision of buying the USOILSPOT. So at the beginning of the week, it was more of a choppy market conditions, though we initially saw price action confined within the $77.40 level and the $76.80 level to emphasize the prevailing uncertainty in the market at that point in time. And usually whenever we have a range bound structure like this, we exercise patience, waiting for the market participants to make a final decision, which would reflect on the chart as either a breakout of the support line of the range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. Now, it was interesting that during the first 3 days of the week, it was more of price trading around our key level for the week and the resistance line of that range at the $77.40 area. So we had our buy position triggered on Monday, though the position was moving about 50 pips coming back into the entry point at break even, move another 50 pips coming back into the entry point at break even, before finally we saw a pick up in momentum on Wednesday, especially following the decline in stockpile in crude oil from the API report, and which was followed suit by the EIA report, which showed a decline in stockpile in this commodity, and this affected the demand for oil, hereby increasing the prices. And as a result of this, we were able to maximize the potential excuse me, of this bullish move by adding more positions. Had the breakout of the $78 area. We had a $78.50 level. Of course, we added more. Had the breakout of the $79.40 level, and finally we added one more at the breakout of the $79.80 level, and yesterday we added another one at the $80.30 area, giving us a total of 1, 2, 3, 4, 5, 6 buy position, dovetailing to over 8,000 pips in profit. And if you had moved your stop losses accordingly, you must have been taken out of all the buy positions this morning. And well done, and kudos to everyone who had capitalized on this opportunity. So with a well secured position at this juncture, what is going to be our next line of action for today? Will this momentum continue to the upside, or are there chances that due to today being the last trading day of the week, market participants, out of the necessity to round off their trading activity ahead of the weekend, may want to be closing in some of their position, which may result in a short-term bearish move to the downside? Now, before we go into the details in understanding the technical of price action, it's important for us to also incline ourselves with the various factors that has been affecting this market since the beginning of the week, and of course what may likely happen today. And from the fundamental perspective, and one thing I would like to say here is some of us may still have a buy position running at this point. Please kindly move your stop loss to secure this current position, as anything could happen today, as price action just hits its highest level in over 3 months, hitting a new peak at around the $81-ish area. Now, this upward momentum comes as market sentiment shift following a larger than expected decrease in US crude oil stocks this week, and we also saw the International Energy Agency revise its demand growth outlook. So yesterday they projected global crude oil demand to rise by 1.3 million barrels per day through the year 2024, upping their initial forecast by an additional 110,000 barrels per day. And if you remember vividly, I think a couple of days ago we talked about the OPEC Plus monthly report, which they did projected the same outlook, but a little bit more than what the IEA are saying. And I did mention that I really don't have confidence in the OPEC Plus monthly report, basically because of the fact that we all know how OPEC Plus is trying to artificially increase the price of oil, and whatever narrative they churn out will be in alignment with this perspective. But now that the IEA is aligning with this projection, I'm beginning to feel confident that the path of least resistance for oil prices is to the upside. Now, given this recent developments, the prevailing trend indicates a bullish trajectory. However, we must remain vigilant for potential retracement moves particularly on a day like this when market participants are expected to be winding down their trading activities ahead of the weekend. Now, looking at the structure from a technical standpoint and taking these various factors into consideration, how do we intend to position ourselves for the next move? Now, before we go into that detail, let's run through the 4 hours time frame to see how the price action had fared throughout the course of the week, how long the structure we identified on the 4 hours time frame. Now, remember, at the beginning of the week, right here on the 4 hours time frame, what we did was to take into consideration the nature of price action since the beginning of the month of February, and what we were able to come up with was a bullish trend, which was further emphasized by this ascending trend line after connecting the series of higher lows. And you will see how this trend line has been respected in the last 4 to 5 weeks before something interesting happened during the course of last week's Friday session, where we saw the breakdown of that ascending trend line happen for the first time in the last 4 to 5 weeks. Now, this incited a bearish idea for us where we were actually projecting a potential retest of structure to continue the downtrend. However, with a key level identified at the $77.50 area, which of course had played a major role in determining the direction of price action since the beginning of the month of February, we were able to position ourselves strategically to capture that uptrend move. And you know how we use our key levels. Of course, as long as price remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying this asset. And look at what we saw at the beginning of the week. It was more of buy pressure above this area, further supporting the idea of getting ready to buy this asset. And thank goodness we were able to capitalize on that opportunity. So we rode the momentum all the way to price breaking out the highest point for this year at the $80.30 level to test a new high at the the $81 area. Now, since price tested the $81 area during the later part of the New York session, we begin to see the resumption of selling pressure again. Now, at this point in time, considering the structures we have here, remember, we have this ascending trend line which has been supporting the bullish momentum since the beginning of the month of February, which was broken during this week. We may be seeing this bearish momentum be the inception of a retracement move, maybe in an attempt to retest this ascending trend line in anticipation of an uptrend continuation. And in fact, if this ascending trend line is broken to the downside, we might be looking at price coming back to retest the $77.50 level. And if we look at the distance between where price is right now into both structures, so we have one at the ascending trend line that's giving about 90 pips approximately to a maximum of about 280 pips to catch there if price drops to the downside. So we are going to be taking that into consideration as well. Maybe we could be seeing some profit taking activity happen ahead of the weekend, so we want to position ourselves for selling opportunity too. However, if price continues to climb new highs, then a buy stop order above the $81 area will give us a beautiful opportunity to capture the uptrend move. So with the understanding we have here on the 4 hours time frame, let's scale back down into the 1 hour time frame to see how to capitalize on selling opportunity if the market presents it to us. Now, scaling back down into the 1 hour time frame, in fact, I would like this ascending trend line to also be highlighted. Let me thicken it a little bit and then allow it to show up on the lower time frame. So scaling back down into the 1 hour time frame, this is the ascending trend line we spotted on the on the 4 hours time frame right here. So this one right here is the ascending trend line. Now remember that at the beginning of this week we had a couple of ascending trend line which has been supporting this bullish idea for us. Remember we had this couple of trend lines here. We had the first one right here, and then we have the second one right here, which definitely supported this bullish idea for us, and thanks to it we were able to maximize the bullish move here. Now since price action is still trading above these trend lines, we will feel comfortable in our buy position. So even with this sell pressure here, we want to see price come into any of this ascending trend line and the appearance of any form of reversal pattern. It could be a head and shoulder, double bottom structure, or falling wedge. All we need to do is mark out the neckline of that reversal pattern and then buy the breakout retest of that structure to continue the uptrend move. And with a buy stop order above the $81 area, we will be keen on adding more buy positions to that trade if this is going to happen. Now another thing that could happen here is price might decide not to drop into any of this ascending trend line and just continue its momentum to the upside. And if that is going to be the case, a buy stop order above our $81 area will help us maximize this potential of the bullish move. So that is how we are going to be guiding our bullish idea on this particular asset. Now when we start considering the potential of profit taking activity today as market participants round off their trading activities, what are the conditions we want to see on this chart that will make us feel comfortable selling this asset? Well, first of all, I would like to see price action break down these ascending trend lines, and I have a level around the $79.80 area which shares a confluence with that trend line. Now a breakdown retest of the structure will be all I need to join this downtrend to the downside. And in fact, if price goes ahead to break down the ascending trend line we spotted on the higher time frame, we are looking at adding more sell position at the breakdown of the $79.40 level. So let's see how the market is going to play out around this area, as we will be looking at the $79.80 level, as price would have broken down of those ascending trend line to signal selling opportunities. And the only condition that will make us continue the uptrend move is to see reversal patterns here. If you mark a double bottom structure, mark out the neckline, and then join the breakout of the neckline. And if price does not come into this area, then a breakout of the $81 level will be welcoming buying opportunities for us. So this is my simple view on the US oil spot for today. I do hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, and use that time to mark out these levels on your chart. All right, so in the absence of no questions, I want to assume that we are all on the same page. So in that regard, we shall be moving right into the next asset on our watch list today. So we are going to be looking at the USTech100 after you will see, based on the trading activity since the new week began, it has been more of a choppy market conditions. We've had situations where we bought at the beginning of the week. We also bought a couple of days ago before we finally saw that bearish opportunity following the PPI data that happened yesterday, giving us another selling opportunity. So it has been a roller coaster of buys and sells and buys again, and price at the moment, as you will see, has been trapped within a wider range between the 18,240 and the $17,880 level since the week has begun, and this further emphasized the prevailing uncertainty in this particular market, which is not coming to us as a surprise at all. And remember, I did emphasize this at the beginning of the week, where I did mention that we are at an all-time high on this asset, and usually when we find ourselves in such areas, it usually takes some time before price action acclimatized to the zone. And due to this, we normally see the fear of market participants who had capitalized on the uptrend come into play, where they start taking some profit off the chart, not wanting to get caught up in a situation where a sell-off could happen from this area. And this usually results in choppy market condition, retracement moves, and of course consolidation phases. So it's exactly what we have expected. However, through the course of the week, what was the major factors that guided our decisions? Well, from a technical standpoint, looking at the structure, remember at the beginning of the week we had an initial range bound structure between the 18,040 and the 17,950 level, which was our key level, and this led to us selling, having our first sell position below the 17,950. This was triggered. I think we had about 100 pips move there, about 85 pips move before we were taken out with a reasonable amount of profit as we moved our stop losses accordingly. Then the subsequent sell position did not do well as it went into a loss, as you will see here. And Tuesday, Wednesday, we had the privilege of seeing a breakout of the resistant line of that range, giving us that opportunity to buy right there at the $18,040 level. Then we added more positions at the breakout of the 18,135 before we moved our stop losses to secure the current position, and we were taking out, I think, with about 100 pips plus on that one too as well. Now, during our live session yesterday, I begin to suspect that the inability of sellers to break through the 18,040 may be the beginning of an uptrend move. And look at what we saw here yesterday. We saw something that looks like a double bottom structure, and we were projecting the breakout of this neckline, retest of it to continue the uptrend. And to further help us be able to position ourselves for any opportunity the market presents to us, we had this ascending trend line marked out. So you know how we use our trend lines. Of course, as long as price remains above it, we want to be looking out for buying opportunity, and only when the trend line is broken to the downside can we start considering selling. So we had a buy position initially, which did not do well as we saw sellers come in, and of course we had a sell stop order triggered below the 18,135 to trigger the second sell positions we had for this week. And as you will see, price dropped significantly. The first position moved over 200 pips before the bullish traction began, and then we added another position at the 18,040. Remember, we said we are going to be adding more sell position. This one moved about 120 pips before we got taken out. The last one did not do very well at all, and I do hope you moved your stop losses. If you have done so, you must have been able to take in some significant amount of profit on this sell position. And for those of us who joined in on this opportunity, well done to you. Now, as we prepare for today's trading session, what are the chances that this downtrend will continue, and what are the chances that we might be seeing a reversal setup today? Well, first of all, let's run through our higher time frame. Let's look at what we saw here at the beginning of the week. Now, looking at the structure, let's go back into our daily time frame. So I wonder why this is taking some time to load up. Please hold on a second, please. Let me give me a moment. I wonder why this is taking some time now. Hold on a second, please. Okay, here we go. So right here on the daily time frame, we had a beautiful trading setup which was identified after considering the character of market participants since the month of October of last year, and we were able to come up with a bullish trend after connecting the series of higher lows, which gave us this beautiful ascending trend line, which obviously we have been using to capitalize on this uptrend since in the last 4 or 5 months now. You know how we treat our ascending trend lines. Of course, when price remains above the structure, we maintain a bullish bias, and the only condition that will make us sell is for the ascending trend line to be breached and broken to the downside. Now, in addition to the ascending trend line, we had a couple of levels which we were using to guide our decisions, and we can see how in the last couple of weeks the market has been consolidating between the 18,410, the highest level for this so far, and the 17,950, which is our key level for this week. And you can see how beautiful the key level also shares a confluence with that ascending trend line, as you will see right here. Now, price broke out of this key level last week, a couple of weeks ago, came back to retest the structure, and as you will see, every attempt by the buyers to break down this key level and the ascending trend line was met with strong resistance from the buyers, which for us is a signal that buyers are still present in this market and have a chance of pushing price to find new highs. And for the fact that price action is trading above our key level at the 17,950, we want to be looking out for patterns and structures that support the idea of buying this asset. Now, with the information we have gathered here, let's scale back down to the 1 hour time frame, as our center of focus today is going to be around that key level at the 17,950, where depending on how market participant reacts to the zone will determine what our next line of action will be. So scaling back down into the 1 hour time frame, this is our key level right here, very much intact. Let me highlight it for you to see. So we have the 17,950. Remember, this was our support line at the beginning of the week. Now, if you look at this structure closely and looking at how the market participant had reacted to this key level, you will see that it has a memory for buying power. Though we had a breakdown of the structure at the beginning of the week, but you can see sellers were unable to settle below this area, and subsequent attempt was met with strong and stiff resistance from the buyers, as you will see here, further giving us a signal that buyers may likely be taking over this market today. And for those of us who had bought above the 17,950, well done to you. I personally missed out on that opportunity, but right now, how do we intend to continue the momentum? Now, looking at what has happened here, you will see that the lowest point is here and the next attempt were here. So we have a series of higher lows, which gives us a signal that we might be in for a reversal setup. Now, with the situation here, I'm of the opinion that we want to be maintaining a bullish bias at this juncture. So I'm going to be using the 18,040. Remember, this level was the area we had our first buy position for the week, where it was broken. Remember, just right here, it was our resistance line at the beginning of the week, and right now again price action is back into that zone. So I want to consider that we are back within the buyer's territory, and buying above the $18,040 level makes a lot of sense for us today. So buying above the structure, we're looking out for more opportunities to buy above the 18,135 area. So you do want to be having a buy stop order above that structure as well, and then more opportunities to buy at the breakout of the 18,240. So all of these levels, I'm having a buy stop order to capitalize on the uptrend. Now, for the sake of this one here, price has already broken out of the structure. Let's see if the market will come back to retest it. If it does, let's be in to join the move to the upside. And please, we are going to be having a wide stop loss today to be able to contain any form of volatility that may happen due to today being the last trading day of the week. So stop losses somewhere close to the key level here will make a lot of sense. That's about 80 to 90 pips depending on where your entry point is. So that is how we are going to maintain a bullish bias on this one today. So let's see how the market is going to play out. However, if price continues to drop to the downside and continue the bearish momentum for the last 2 days, then below the 17,880 will make a lot of sense for us to sell, as a breakdown of the structure would have taken out the lowest point for this week. However, we could have a privilege of joining even before that breakdown happens. That is, if we can see a breakdown and retest of this structure with signs that buyers are finding it difficult to stay above the key level, then we can join before the breakdown happen. But if this does not happen, let's have our sell stop order below the 17,880 to capitalize on any bearish move here. So our center of focus for today is between the 18,040 and the 17,950, where depending on the direction of the breakout will welcome trading opportunities for us today. So I encourage us all to mark out all of these levels on your chart, as we will be needing them as a reference point to guide your independent trading decisions. And if you have any questions whatsoever, I will be taking the next 5-10 seconds off to see if you have any and attend to them before we run through the next assets on our watch list. Stay tuned in, guys. I'll be with you on the other side. Okay, so I can see a couple of comments here. I had to refresh my comment box. I never knew I had some comments. I can see you 10551548. Good morning to you. I see you do Abdul. I see you too as well. I have Zero here. What a name. Now Novato32. Good morning to you. Zero, you're welcome. Glad to have you guys around with us today. So in the absence of no questions, I want to assume that we are all on the same page here, and all we have discussed so far has been quite explanatory. So let's move right into the next asset on our watch list. So the next asset we are going to be looking at now is the GBPUSD, and in fact we've done pretty well since the new week began. Remember, we were selling, and during the first half of the week we made some significant amount of profit after capitalizing on the breakdown of that range bound structure we identified at the beginning of the week. Now look at the structure we have here. Remember, at the beginning of the week we were seeing price action confined within a range between the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market at that point in time. And whenever we have a range bound structure like this, we know that there is a prevailing uncertainty going on. Hence, we want to exercise patience, waiting for market participants to make a final decision, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And during our live session on Monday, we already saw price break down the structure, and I did mention that for those of us who had missed out on that opportunity, let's exercise patience and wait for a retest of structure to happen before jumping into that sell position. And thank goodness we were able to capitalize on that opportunity. As you will see here, we had our first sell position at the breakdown of the 1.285450 level. We added more at the breakdown of the 1.28250 area, and lastly I think a couple of more positions were added, as we added another one at the breakdown of the 1.28, and finally we added one more at the breakdown of the 1.27760 area, though the last one did not do well as we were taken out of that one, but the other three did very well. So as at the first half of the week, we were doing pretty well on the GBPUSD. And on Wednesday, Tuesday, Wednesday, we begin to see the appearance of buy pressure as sellers were finding it difficult to continue the downtrend. And as at Tuesday, Wednesday session, we saw the lowest point for the week at the 1.2760 level. And then the second attempt by sellers to break through that area failed, as we saw the barrier at the 1.27760 in sight buy traction. And as a result of this, we were beginning to see a potential reversal setup. As you will see, we had something like this, where the neckline of that reversal pattern was exactly lining up with our week's key level at the 1.280 area. And right here on Wednesday, we were able to take advantage of that. We rode that momentum, though most of the time price was trading within a losing position for us. But during the live session yesterday, we already saw a traction as price had already edged out of that area, moving about 25 pips. And I can remember telling us here yesterday that we do want to be moving all our stop losses to secure the current buy position. And if you had done that yesterday as we instructed, you must have been taken out of that buy position at a worst case scenario break even. Now, due to the current structure we had here yesterday, we never negated the potentials that sellers could also come in. And to guide our decision yesterday, we had this beautiful ascending trend line in place, and we did agree that this that we're only going to be selling if price breaks down both the ascending trend line and that key level at the 1.2800 area. And as you will see, price triggered the first sell position right there, and then we had more sell positions at the breakdown of the 1.2776, added one more at the 1.27600 level. And in fact, if you had moved your stop losses accordingly, you must have been taken out of all the sell position at this point in time. Once again, congratulations and kudos to everyone who has been part of this profitable journey. So yesterday we saw how the US dollar gained momentum, breaking down this ascending trend line right there, following another round of strong inflation data from the United States, weighing down on this pair amidst diminishing expectation of a Fed rate cut in June. And of course, this was driven by the upbeat US PPI figures that came in yesterday. Now, this recent development has led to an increase in the US Treasury bond yield. We all know how the Treasury bond yield is directly proportional in value to the US dollar. The US Treasury bond does very well, the dollar will follow suit immediately. And this is further supported by a generally subdued sentiment in the global equity market, thereby reinforcing the strength of the US dollar and putting much more pressure on the pound sterling so far. Furthermore, market participants are now pricing, which is surprising to me, a higher likelihood of the Fed initiating interest rate cuts at the June policy meeting. This sentiment may reinforce a decline in US Treasury bond yields, which may temper bullish bets on the US dollar. Now, another thing that market participants are also going to be considering is the expectation that the Bank of England will maintain higher interest rates for an extended period of time, which could mitigate losses for the pound sterling at this point in time. Now, given this uncertainty surrounding the Fed's rate cut trajectory, market participants may opt to wait for the clarity before taking significant positions on the US dollar. Therefore, attention will remain focused on the upcoming FOMC meeting that is starting next week, Tuesday. So in the meantime, while we try to anticipate the rounding of trading activity for today's trading session, we will be looking forward to the publication of the University of Michigan, the Consumer Sentiment Index, which is coming up in about a couple of hours from now, to guide our decisions for today. And looking at the structure, you will see that in the last, last 15 to 18 hours now, price action has been confined within this range between the 1.276 and the 1.27300 area to emphasize the level of indecision going on in this market right now. So at this point in time, we are going to be using the structure here to strategically position ourselves for the next move. And of course, you know how we do it. Whenever we have a range bound structure like this, we want to exercise patience and wait for price action to either break out of the resistant line of that range to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. So I would like to extend this one out, as this is where our center of focus is going to be for today. So we are looking at either the breakout retest of the 1.276 to join a counter trend opportunity, or a breakdown of the 1.273, that is the lowest point for this week, to join a downtrend continuation. So this is where our center of focus will be for today. And in fact, if price action goes ahead to break out of this descendant trend line, we'll definitely be looking out for more buying opportunities around the 1.27600 area. As you will see here, we want to be adding more buy positions at that juncture. And then if price action goes ahead to break out of this key level at the 1.2800 area, we will definitely be adding more buy position. Then another level is around this area, which I doubt price may get that far, but we may see some volatile move that might just trigger all our buy stop orders. So we are placing one more at the breakout of the 1.28250 level. So I encourage us all to mark out these levels accordingly. Very, very important, as we will be needing them to guide our trading decisions for today. So if you have any questions as regards to my current explanations, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off due to the limited time I have, to see if we have any questions before we go ahead to the last asset for this week. So stay tuned in, guys, while you also use that time to mark out these levels accordingly on your charts. Okay, so in the absence of no questions, I'll take this as a confirmation that we are good to go. So it's on this note we shall be moving right into the next asset on our watch list. At least 100 pips thereabout, and for those who capitalize on that opportunity, well done to you, and kudos for being on standby to capitalize on that move. And it has been quite an interesting week for us all on the XAUUSD, though price did not move as expected compared to how we usually it usually moves in the last couple of weeks. But thank goodness we are still on the positive side of our portfolio, though we had a loss at the beginning of the week. Remember, we initially bought the breakout of the 2182 right here, which did not do very well at all, as we were thinking that price will continue that uptrend, but it never happened. We saw price drop, and due to the CPI and PPI data, we begin to see some bearish traction resume in this market. And it's okay. Today is the last trading day of the week. How do we intend to capitalize on the next move? Now, the renewed selling pressure following the hotter than expected US producer price index cannot be ignored, and the question now is how far will this go? And remember, this hotter than expected producer price index also bolstered a rise in US Treasury bond yields, which of course strengthened the US dollar as the data hinted at persistent inflation, hereby dampening expectations for the Fed's early Fed's rate cuts for this year. However, the market has turned a little bit risk averse in the past 7 hours, keeping the US dollar subdued as market participants await next week Federal Reserve policy announcement. As you will see, price had consistently found higher lows, as you will see here, giving me this new ascending trend line that we will be using to guide our trading decisions for this week and for today. And you know how we use our trend lines in this community. As long as price remains above that ascending trend line, we shall continue to maintain a bullish bias here, and the only condition that will make us sell is for that trend line to be broken to the downside. Now, despite recent development, the market still anticipates Fed rate cuts in June. Sincerely, I'm surprised about this, though. What can I say? The CME watch tools says that markets still anticipate or still leaning towards a Fed rate cut in June. Now, this coupled with the risk of sentiment may have prompted some buying activity in gold, resulting in this new higher highs and higher lows that we are seeing here in the last 10-12 hours in this market. Now, with the situation here, we are going to rely on this chart structure to guide today's trading activity. And this morning, while I was dissecting the current market structure, I was around this area when I saw this engulfing bullish candle striking out of that $2,166 level to give me a signal that we may likely be seeing an uptrend move. And as a result of this, I decided to position myself at a retest of structure, which actually happened. So I joined the bullish move there and then added another one at the breakout of the 2,170, which is currently not doing very well at this point, and my first position was taken out with some small profit, I think about 10 pips thereabout or so. But at this point in time, how do we intend to capitalize on the next move today, especially considering the fact that market participants will be rounding off on their trading activity today? Well, I have a range bound structure here which I will be using to guide my trading activity today, and that is a $4 range where price has been confined within the 2,170 and the $2,166 level for the past 4 to 5 hours before we saw that breakout of that resistance line. So at this point, I want to see how the market will react to this range. If it breaks out, for those of you who are yet to join this trade, I'm looking at placing a buy stop order again above the 2,170 to continue the uptrend. And in fact, if price breaks out of this descending trend line right here, we will be looking forward to adding more buy position at the breakout of the 2,175 level, where I already have a buy stop order sitting above the structure, and then looking out for more opportunities at the breakout of the 2,182 and the $2,189.50 level, which is the highest point price action has been for this week. So that is how I'm going to maintain a bullish bias here. I want to see price break out the 2,170, and a further breakout of that descending trend line will welcome more buying opportunities. Now, to join a bearish bias here, that is the downtrend continuation here, I'm looking at, I need to see price break out of this ascending trend line first. I need to see price breach this ascending trend line, break it to the downside, and in fact look at how beautifully it shares a confluence with the $2,166 area. Remember, this was the same level where we got our sell position initiated yesterday. So let's see if the market will break it down. If it breaks it down, we have no other choice than to continue the downtrend, where we will be adding more sell positions at the breakdown of the $2,160.50 level. And I think we have one more level at the $2,150 level to add more sell positions. So all of these levels will have some sell stop orders, and then we have our key level again at the 2,143. A breakdown retest of structure will definitely welcome more selling opportunities. So this is my simple view on the XAUUSD today. So as you will see, we have our center of focus between the 2,170 and the $2,166 level, where depending on how the market reacts to the structure will determine where price will be closing for this week. So I do encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And I hope I made myself very clear on this one. But if you in any way missed out something, or you need some clarification whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we start rounding off on our trading analysis session today. Hello Simo, hello engineer, hello Mr. Fu, Hel Kaput Piti, Vermeer. Good morning to you guys, and excited to have you around with us this morning. I hope you did not miss out on most of the part of the session. You're welcome. So in the absence of no further questions, I think we have come to the end of today's technical analysis session, and in fact to the end of this week's analysis on the XTrendSpeed platform. It has been a wonderful week, as we were able to scoop in some significant amount of profit across the assets on our watch list. And once again, congratulations to everyone who has been part of this profitable journey. So far today, we were able to attend to 4 of the financial assets on our watch list for this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally my favorite asset, of course, the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to identify simple trading setup to manage our current positions, and of course strategically position ourselves for the next move. And I do hope we all marked out these levels as we've illustrated during the course of the session. If you have done so, well done to you. So what we're going to be doing now is exercise patience and wait for price action, to wait for the structures to mature. And for those of you who are joining us for the first time, I do hope we are able to get 1 or 2 things from what we discussed here today. And if you have done so, how you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, and eventually be able to use the information you gathered here to enhance your own trading decisions. So I look forward to seeing more of you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to plan ahead of the new week. And in fact, if you have any assets you want us to look at for next week, you want to be dropping them in the comment section on Monday, and trust me, I will try to ensure that we incorporate it into our plans for next week. So it's on this note, I would like to wish us all the best of luck today. It has been a wonderful week, and I hope that we can replicate what we had this week next week. So I look forward to seeing you same time next week. trade smart, trade consciously. I wish you a beautiful weekend and have a wonderful evening, everyone. Bye.